Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading. So you might be interested in that. All right. Happy Wednesday, everybody. Wednesdays are a day set aside special to be completely wild and unpredictable. And so today is a very wild day. I know that the FOMC meeting minutes just came out not long ago. That was only 18 minutes ago or something. And I wanted to give you a heads up that I am going to be a little fast today. Awesome dilemma. Glad to know we're live. That's good. Thank you for being here. Yeah, so I've got a meeting to be at, and I have to leave in about 25 minutes. So we'll make it a little bit shorter today, unfortunately. But there's plenty to talk about. First of all, I wanted to go back and congratulate. Let's see. I put the had it here a second ago. Here we are. On the giveaway today, Serena Love was our winner, so congratulations. The $25 was sent to your Ethereum address already, so that is awesome. And just a reminder to anybody who puts in more than one address, I'm just going to delete one and make sure that everyone has a single entry so that we don't have any unfair advantage. I want to make sure that we're rewarding people for being here and contributing. I might be changing things up a teeny bit. It may not be complete random so much, because I would love to get a little bit more, conversation happening. So I would love to see a little bit more chat in our general. People are still putting comments in general instead of the Calvin Waite channel, so just make sure you're in the right one. You have to click on Calvin Waite and general chat. I probably should rename it or something. But anyway, this general is for, it's just for, I think this is for the entire platform, not my channel specifically. So yeah, we better not bother everybody. All right, so that's that. And so with that, let's just jump right in. This is the 5-minute chart. So we're watching, what has happened since yesterday's close at around 27,200. Things were looking phenomenal. And then just the midnight marauders, about 3 hours after close, we have, if the market wants to move, that's when it moves, when volumes are low and when things are thin. So we dropped the market down pretty good. And then when we woke up, everyone agreed that it was a red day. So everyone went ahead and created a continuation. Currently, we're exiting a red zone on the 5-minute, so usually that's a signal that the bleeding stopped. For some reason, I noticed that it kind of happens in these kind of triplets. So we had an exit of the red zone here, here, and here. This might be our selling climax for this particular move, but let's kind of back up and see kind of the situation from this. So whenever I'm in a position, Barbarian, nice to see you. Nice to have you join us. Whenever I see a move that is decreasing in strength, it starts making me nervous that a change is in the way. So I know some people, there was a comment on my Twitter, well, your call sure didn't age well. I'm like, it's hard to get it right every time. But the reasoning behind my decision is that we are heading down. This is definitely a bear move, but the bear move is getting weaker. And as you can see here, the slope is still down. If the slope was up, it would suggest a weak bull move. What this is showing is a weak bear move. And we are right on top of some major averages. This candle is not closed, so we still have 5.5 hours to see what it even looks like. I mean, is this going to be a giant red candle that goes all the way down? Or have we kind of seen the worst of it and we'll slowly tick up during the day? Because depending on where this candle closes, it could really signal a lot of things. Number one, I kind of feel like this 200-week moving average is getting stronger and stronger. The more difficulty we've had approaching it and how long it's taken us to get there, and then today where we absolutely stopped right on it, it just makes me feel like I just don't think there's a lot of traders that are going to allow it to go below the 200-week moving average. Historically, buying at the 200-week moving average was the best opportunity in the entire market. You just didn't get it very often. The COVID crash gave us a little chance. The absolute bottom of the bear market in 2018 gave us a chance to buy on the 200-week moving average. And then a couple of times way early, 2015 and August and January of 2015, these were the only times, and if you'd have bought anywhere near this 200-week moving average, it was just the best place to buy ever. And so the long-term traders and the people that have been around, they really, there's a lot of weight that's put on this weekly average. The reason that it's still in play is because we definitely rejected here. This was undeniable, and it happened right on that 200-week. We sliced right through the 50-week as if it didn't even exist. So if I go to the weekly, you can see which, some people might have thought that we rejected off the 50, but we didn't even, we went through the 50 like it wasn't even there. And so it's the 200 that's pulling the punches in this situation. And right now, on the weekly chart, our 200 is at 26,276, so $25 higher than where we're trading right now. And I've been speculating that in an ideal world, I would love to see us wick down to this 25,250 area. But if that happens, we would absolutely, by the end of the week, need to recover back above the 200-week moving average. So the title of this video is it better to be right or is it better to manage risk? And in this case, the risk reward is what I'm after. So yesterday we were doing well. We're, let's say, 27,200. So let's say I was late to the trade. So I actually entered my trade down lower, down below 27, but we'll just say that it was 27,200 just because I think most of you knew that I was going long, or at least was interested in it, about right here. And the question is let's see what the downside versus the upside is. And the downside to the 200 is a 3.44% move. This is pretty much the $1,000 that we're down today. So 3.44, I'm leaving this on the table by going long here and not keeping my short. So if my risk management allows in my portfolio for me to handle a 3.44% move to the downside, then I can handle this move, and it's not a big deal. It's not emotional. But let's say we get lucky enough to wick down to these, to here, 25,250. That's a 7% move. So if I'm trading $100,000 or something, can I handle a $7,000 drawdown? I can. I think that's reasonable. It's something that it's not comfortable, it's not fun, but this move here, as long as the risk management is there, it's in a pretty good spot. Well, what's the risk on the other side? So let's say this market, because when you place a trade, you've got two options. Either it goes up or it goes down. You know what I mean? So you do your best with all of the technicals and all the information that you have at your disposal to improve the odds from being a pure 50-50. But really, it'll go up or it'll go down. There's pretty much no other choice. So when I placed this trade, I was thinking about how much downside can I handle. My prior trade was already profitable. I made about 10% on my investment. Yeah, something like that. And so I kind of had a buffer built in that I could handle about a 10% drop and just break even from my prior short. So the question then becomes, do I have enough resources, or do I have risk management or controls in place that if things really do get down here and they start threatening to get even uglier, can I negotiate from there? But I've got a little bit of wiggle room, and you want to make sure that you have wiggle room in every trade you're making. So, yeah, about 10%. All right, so now let's say that, and hypothetically we ended up, let's say this does bounce off the 200-week moving average and things start hopping. At what point does the upside outweigh the downside? So at 28,100, I am now up 3.3% or something. And this move, it would have only been an $800 move from where we were, and I would have, well, let me make sure I'm doing apples to apples. Okay, so 3.4 would have been down $900. 3.4 is up $900. So this is about 28,150. So when this comes around and starts moving back up into the green area, this is how far we have to move. Well, if we get to here, our only place of resistance at this point is now the candle body closes right here. And look at this number. This is at 30,300. There's going to be a lot of FOMO, and this market will be very fast. It'll be hard to get in if we get pretty close to this level here. And I'm already at 11.5%. So yes, I was wrong. I was expecting the market to do better than it has today, but I still look at it as a temporary thing. And I also, when I'm placing a trade, I'm also analyzing my risk of whether I can handle it or not. And the risk reward was almost perfectly in balance, even a little bit higher than this. I would even say it could have been around 27,500, 27,400. That would have been kind of the perfect balance between, okay, I've got 10% up and a 10% down move will hit these supports. So the question is do I have the liquidity and the patience to handle it going wrong? And how temporary will this be? We've already had a pretty solid move to the downside. It'd be really hard for this to completely cut through the 200-week moving average. The 50-month moving average would be even more intense for us to close below this. And yeah, I just see the downside as being limited. Even though I was wrong, I still see the downside being limited, and I'm willing to wait and deal with being wrong for a little bit, and that discomfort of having a position going against you for a little while, because I'm viewing it as temporary. I still believe that we have one more push to go. So if I go over to the monthly, we're about a week away from the monthly close. This monthly is doing absolutely, it's really looking good. I don't see this move as a total fake out for the bulls and we're heading back down to 15,000. That's just not the shape of this chart. What it feels like is we've established a bottom, we've moved up, and now we've broken some serious averages. The 50-month moving average is huge, and if we come back and chill out and kind of give it a little bit of nod our hat as support on the other side of this 50, I can really see another move or two happening over the next couple of months. And historically, that is the scenario that usually plays out, because back here we pull up, we have a red month, and then we start leveling off and gaining some strength. Here's a strong move. We have a kind of a red candle to chill us out and get us going, and then we have a move, and then especially at the end of a bear market. So this is probably our closest match, is we've had 4 candles off the bottom where we've really gotten off of the bottoms where the low was essentially defined. Guess I could put it up here so you can see it a little easier. But yeah, 4 candles to get us off the bottom, a lot of good positive upward action, and then we need a month to give us a break, and then we start moving back up again, because I think there's a lot more upside. It doesn't, this is probably extreme for where we are in our cycle, but here we've had 4 candles coming off the bottom. We've definitely gotten away from our bottom, so that's established. But after 4 months, you would expect us to have some period of a little bit of a pullback and kind of, gain our footing before we do anything else. So I'm still expecting this summer to be pretty awesome. And if we're going to have a red month, we might as well have one. So let's get it out of our system. And if we have a small green or even a flat month next month, this is going to be really it's going to start looking really good for a turnaround. But we'll be patient. But that's just kind of the way I'm reading this, because there's a lot of support here, and you just don't know where the support's going to stick. Could it have been our 100? Let me get over here. Could it have been our 100 day? It could have. It still can. In 5.5 hours, do we climb back up? It'd be a little bit of work. 26,600. We'd have to come up $350 or something. It's not the end of the world. We could potentially do that. I'm not going to cross my fingers yet, but could we find support on the 200 week? It's very likely, especially on the weekly candles. So even if we dropped below temporarily, I don't see us absolutely dive bombing after, getting below this. And then the 50 month, that's the other guy right here. It's at about 25,000 flat. And then we've got the 20 week below us. There's just so many places where we could find support. And above us, where's the resistance? Probably the only major resistance that we have is potentially the 50 day, which is sitting at 28,275. So, potentially there could be a pull, there could be a pause here. But that's really all I see. Like I don't see layers and layers and layers of resistance above us, but I see layers and layers and layers of support below us. So can I be wrong for a little while and manage my risk and make sure that my count doesn't get blown up by a move to the downside? Yeah. And what's the flip side? I could have been right, and it could have gone the other way. And I'd like to lock in the potential gains. Even though it wasn't the perfect trade. There was a lot of reasons why this was a good trade, and I'll kind of show you a little bit of my reasoning. Look at this. Yesterday, right after close, we had kind of pulled up into this. We'd had a resistance line here, which we broke up with this candle. And then when we came back, we found it as perfect support. So this was sort of a perfect storm for us to have a little move. If we'd have just gotten a little close above 27.4, we'd have been out of here. But just fell apart. Like it was a good setup. It was a good thought, and just not every trade works out for you. So, but if you're placing a trade blindly and you're like, it has to go my way or else my account's going to get blown up, then you're doing something wrong. So every trade I'm placing, I'm weighing out the reasoning, the potential upside, the potential downside. I kind of have mental notes in my mind of where does this really fall apart? Where do I know that things have gone wrong? And just depending on the account and the liquidity available to you, is there a place where we could potentially hit a free fall spot? Honestly, if we come up if we came up and like rejected off the 50, and then we came back down to the 200, it'd be tough. It'd be tough to really see a scenario where we completely lose it, unless we get like a weekly close below the 200 or something. Like that would be the place where I'd be like, okay, I better lock in a hedge here so that we can, kind of see where this is going to end up landing in the end. So Ras Palmer, hey Calvin, UK sees you. That's awesome. And Stoyan Makedonsky, hey Calvin, thanks for your thoughts and insights. You're welcome. Yeah, hopefully you're not following me because you think that everything I say is absolutely going to come true, but I sure have a lot of reasoning for the things that I do. If I can't explain the reason why I'm taking a position, then I shouldn't be taking a position. And I also know that when I make a trade, there's a real potential of it going wrong. Even if I'm 80% sure I'm right, that 20% is a big number. I would never put 5 bullets or 1 bullet in a 5 chamber or something and let it rip. I just, it's too big of a risk. So you shouldn't be trading that way either. If you can't see the worst case scenario when you're making your trade, you really need to be reevaluating what you're doing. And then Barbarian says, hit that like button. I appreciate that. Yeah, so that's pretty much everything. I was just kind of pointing out a couple of these things. The day still has to close. This ended up, this line here is so defined. Currently, the Ethereum is finding support on the 200 or the 100-day moving average. The 200-week is way down here. So it's just in a little bit different spot. But same story. I don't see a lot of resistance. I see the 50. Potentially, but currently we're holding the 100. What is the week? Manzanarota. Sorry if I mispronounced that. Awesome. Thanks for joining us. You're on Twitch. I don't have too many people join us on Twitch, so that's awesome. But yeah, look at this weekly chart on Ethereum. It feels like we've got our 20 week coming up. We have a golden cross about to happen on the weekly. It's just really funny how that worked out. We'll have to see whether it's next week. Next week we see the golden cross because we had a death cross right here, which doesn't matter because our price action is higher. But a golden cross is actually pretty awesome when you're on the right side of it. So who knows if bots or other technicians will catch that. Okay, that's about it. Do you mind looking at Casper if you're up for reading charts? Yeah. I'm gonna close up shop here in 4 minutes. I gotta run to be somewhere, but I really feel like these pullbacks are pretty temporary. I don't see them being permanent. Let's see. To be honest, I think most of the alts are gonna be looking pretty ugly right now. Casper. I'll look on. Let's see. Wonder if KuCoin will give us some data. So Casper on the weekly is right at support. This actually may hold up. It's always risky, but this hasn't moved too far. From bottom to top, it's only been about 100% gain. So this is almost ranging. So that makes it a lot less toppy, which is really good. Excuse me, I got to sneeze. Okay, muscled it down. All right, let's see. On the daily, we did flip from green to yellow, which is bearish. Yeah, there's a little bit to overcome here, but it's just not too far. In this case, we've only dropped about 23%. That's pretty fair for the alts. So there could be something here. What I'd be waiting for is probably a close above the 20. For the very, very short-term moves, oftentimes the 20 is helpful. You can kind of see, if you're on the right side of the 20, you've got some room to run. And if you're falling on the bottom side of it, sometimes it can save you from extra downsides that you might have You don't want to average in too early. But yeah, there might be something there. And then if you can look at Bitcoin price structure similarity between May 22nd and June 22nd on the daily, and this last 2 weeks on the 4 hour. Oh my. Okay, just 1 second. Let's take a look. I'll put Bitcoin on top. I'll put Bitcoin on the bottom. And you wanted me to look at the daily on top. So we're looking at May. May to June. Okay, so we're kind of doing this flat leveling. Got a couple of fake outs happening. And then you're looking at the same thing on the 4 hour that's happening right now. I can see what you're saying. Yeah, very interesting. So, size-wise, the top and bottom of our range here is about 12%. And size-wise, top to bottom here is about 3%. So it's about a fourth. So if we were to drop out of our range, I'll just take the most recent support, looking at this support here, to the bottom, that was about a 40%. If I divide that by 4, could there be a 10% drop from here? Boy, that'd be pretty wild. That would put us at 24,000. Yeah, maybe. It's hard. It's hard to get there because there are things in different places. In this case, we were below the 100 day. Here we're above the 100 day. Or this is the 100 week. Okay. There's a couple of differences, and I think part of it might be emotional. These shorter time frames don't give you a ton of time. I mean, you never know though. Like honestly, let's take this as a worst case scenario. Could that be? Is there a worst case scenario on the table that we could drop to 24? Yeah, there is. You know what I mean? In fact, it would be the most likely to see that outcome happen on the monthly, because our most recent actual resistance on the monthly is at 23,400. So there are technical reasons we could get that low and still be bullish. So it's worth some sensitivity analysis on your portfolio to say, all right, what happens if my entire portfolio loses an additional 11%? Would that blow up my account? And at what point do I need to hedge? And I feel like I need to brace myself for whatever comes. And that's what it's all about. It's not about the indicators you use. It's not about the special algorithm that you have figured out. It's all about your risk management. If I make a trade, is my reward better than my risk? Check. And if the worst case scenario happens, can I handle it? And if you can, then yeah. I mean, you're not always right. If the worst case scenario, gives you a better risk reward, then, it's kind of a blessing in disguise, as long as you can handle it. So anyway, I better wrap up there though. It's awesome to have a Wednesday, and yeah, Wednesdays just never going to bed last night, I was like, this could go either way, and Wednesdays are just insane. So I wasn't sure if maybe we'd get some wild movement from the FOMC meeting notes. That happened right here, and the market dropped a little, but nothing out of range. So the market didn't care. So you just never know what's gonna happen. But all right, guys, thanks a lot. Oh, cool. You've been following since. So Menzarota says, Calvin, you are great. First time on a live stream. I'm so excited. Been following you since 2021. Cool. Hopefully you're still making money. Yeah, so that's cool. Awesome, you guys. We'll let you go there. Thanks for being here. We'll catch you live next Wednesday, but we'll keep the giveaways coming and all of that. Be sure to say hi though. I might be looking around for ways to reward people for comments or other things that may not necessarily be just pure chance. All right, you guys. We'll catch you on the next one. See ya. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.